the fire starter. Watch this.
Well, firstly, thank you for joining me, gents. It's a great time to be talking about investing in Bitcoin companies. So we're going to get into all of these questions. I think a common question that many people in the audience may have is, of course, why invest in Bitcoin companies? Could I hold Bitcoin instead? And maybe Bitcoin is the benchmark. So I know you guys will have some interesting thoughts on this. So maybe, Mike, do you want to start?
Yeah, hello, good morning. Is everyone excited? All right. You know, Bitcoin VCs probably face that question more than any other VC, right? If you're just investing in a fund, you're probably not grilling the general partner about whether it's going to outperform the price of Bitcoin, because Bitcoin isn't really on your radar. And it's hard for the Bitcoin VCs because we're up against the best performing asset ever, right? And if we didn't think that investing in early stage Bitcoin startups was going to outperform Bitcoin, we wouldn't do this. We would be doing something else. And Christopher has some numbers here on Coinbase and Kraken, right? There's not really too many exits in the Bitcoin space that are relevant, but over 5-year periods, you know, Coinbase is up probably over 300x over a 5-year period compared to Bitcoin, which might be up 50x. And same thing with Kraken over the same type of period. Maybe it's up 50x versus, I don't know, maybe 10x in Bitcoin. So historically, it's supposed to outperform, but a lot of that has to do with timing, right? You can invest in a poor time, and it's a completely different story. But the one thing for sure is that both of us are definitely going to outperform Alameda and a lot of the crypto funds. So we've got that going for us.
We're already winning.
So Christopher, do you want to add your thoughts?
Yeah. Look, I think there's something very powerful about competition. I am one of those awful capitalists you hear about on the news media all the time. And what's interesting for a Bitcoin native context is that if you think about all the patterns that have gotten picked up, where markets have said, this is validated, I need this, in large markets and large volumes of transactions, that tends to be a function of a business competing with other business in the process of solving the needs, lowering UX frictions, and actually onboarding users, which long-term means there's more demand on the native asset to the Bitcoin network itself, which is very strong alignment. And so I think, you know, I talk sometimes about, and as a community, we all recognize that and have a sense of an inevitability for Bitcoin. And I think two things that almost seem in contradiction can both be true. There can be an inevitability for Bitcoin, but there can also, at the same time, be a circuitous and indeterminate length of path or time to true Bitcoinization in the future. And I think the companies that are helping build that future, they're sort of pulling that inevitability and that uncertainty a little closer to the present. And so there's a little bit of a virtuous circle where you're getting returns on the companies that are bringing that forward to the future. You're driving adoption. That's also helping your bag of Bitcoin as well. And so it's actually very well aligned, and it's very disciplined. I would say that we talk about things like time preference, and those things matter. If you want to practice time preference, venture capital, you know, it takes 10, 15 years to make a truly globally recognized hallmark, you know, marquee brand. And so it's very much aligned with the long-term vision of Bitcoin as well. And so for me, we feel like at the end of the day, we all work for Bitcoin. And for me, if I have some edge, some expertise in company building, that's where I can do my work for Bitcoin on a daily basis, and we all have our lane, we all find our specialization in the way that we can contribute. For me, it's a matter of mission, it's a matter of values alignment, and it's a matter of me doing the work that I feel like, and everybody on my team, we almost are driven from this place of almost like a sense of calling. There's passion and mission alignment, and mission can do some powerful things for companies.
Yeah, really excellent way to look at it. In some sense, there's an ideological aspect, like we think there's a moral component to Bitcoin, and that fiat currency and central banking and fractional reserve is immoral, and Bitcoin is the answer to that. But then there's also a component, as Mike was mentioning, that some of these companies will go on to outperform as well. Now, we don't know in advance which ones those will be, and as part of the venture capital model, you're obviously investing in a range of companies, and some of those will go big, and some of those maybe not as big. So you had something to add?
Well, also in terms of timing, which everything's great hindsight. You know, some of these Bitcoin venture funds, they might accept Bitcoin, right? You might be able to make your LP capital contribution with Bitcoin, with some sort of like lending component, right, or borrowing against your Bitcoin. And in a bull market, when everything's going the right way, that's incredible. It's incredible to be able to post a certain amount of Bitcoin, borrow against it, and watch the price go up. And if you get caught on the other side of that, you just have to deal with it. So like we have a very small pilot fund, and Bitcoin was 60,000. So somebody who maybe committed for 25,000 to our fund, they sold half of a Bitcoin and they made that contribution in cash. We have a very small positive IRR for our fund at this point in time, right? It's not, we're 2 years in. Small positive IRR based on that cash contribution, right? And if you were just measuring your wealth in dollars holding Bitcoin, you know, you'd be down 50% over the same time period. So you can never predict the timing, and that's a big part of it.
Yeah, with interest rates in this environment being higher, when you can, and you being the general public would have the perception of I can get 5% or more with you know, something that looks like risk-free to the average person, you need a higher internal rate of return in terms of performance. And through an asset class like venture capital, you know, and I'm, look, there's definitely a philosophical or ideological component that drives the mission piece, but I'm here for the returns. I mean, I really believe the outperformance is possible, and I sometimes share with people that are thinking around this question. It's there's a storied venture capitalist. He was the founder of Sequoia Capital, Don Valentine, and Don used to like to say, "Give me a B team in an A market." And why? It's not because Sequoia is looking for B teams, to be sure. What he's saying is when there is a strong tidal force that's moving a market in a direction that you can almost make some mistakes and still have outsized returns. The internet age and the global monetary revolution that's happening with Bitcoin, in my view, my market view and a core thesis is that's going to be the mother of all waves. And so that's part and parcel to why we do what we do. So there's a mission component, and there's absolutely a strong returns component.
Fantastic. And so let's move on to the next topic. This is an area that I know Trammell Venture Partners recently put out a report on this in terms of, you know, assessing the space in terms of Bitcoin and so-called, you know, quote-unquote crypto, even though I don't really like that term, but we're going to get into that, of course. And of course, let's talk a little bit about the size of the capital. How much money is going into some of these Bitcoin startups? So, Christopher, let's start with yourself.
Yeah, appreciate that. It's TVP, we've been around. I should introduce myself. Christopher Calicott, founder and managing director at TVP, and we've been around since the very early days with Bitcoin. We were Series A investors in 2014 and a Series A bridge for Kraken when it was called Kraken Bitcoin Exchange. We've been investors in Unchained Capital, Voltage, and many other brands that you would know in the Bitcoin native space. So we're in a very, I would say, unique position to be able to instrument, at least currently, before it grows at an accelerated pace, the universe of Bitcoin native companies as we understand what that means. And so over the last few years, we've been doing our homework through 2019, 2021, and 22 to understand all of the deals that are happening from pre-seed to Series B. And so we were able to put this together and call out some highlights. Importantly, for guys like Mike and myself and others that are on mission with Bitcoin investing, we've got to sort of soften up the institutional allocator mindset, which has been set by a bunch of crypto VCs that says the innovation's not happening on Bitcoin, which is utter bullshit. And it'd be a shame to put tens of billions of dollars into a bunch of stuff that doesn't go anywhere and miss the monetary revolution of the internet age. And so we've got to poke at that, challenge assumptions. And so a couple of highlights, and by the way, you can download this research for free on the TVP website. First, 2022 was, in terms of crypto spot markets, down bad. If you look at crypto venture apart from Bitcoin, it was roughly flat. It was up about 1%. Bitcoin native as a category was actually a breakout category in 2022. It was up about 53%. And so I think that's really exciting. I think one of the things we saw in earlier waves with Bitcoin native, before there was even sufficient deal flow to give rise to a dedicated mandate, was that founders wanted aligned capital, not just any old capital that get the Bitcoin component. And for us, we wanted to say, okay, in bear markets, these companies can't be facing an existential threat. And so this proved that out. There was money for Bitcoin-focused founders during this bear cycle. And so anyway, appreciate the call out. And I think you have any thoughts on that? Or?
Yeah, it's a great report too. I think it was published around in April versus crypto versus Bitcoin. And we always talk about Bitcoin dominance, right? It's been a thing that people have talked about forever. The Bitcoin dominance of venture capital referenced in the report, it's about 40%. Compared to crypto. And over this 2022, which was a terrible year, the total dollars in Bitcoin VC was up maybe almost 15% or so. And the total number of companies was up maybe 70%, right? So there's more going on. And there were some other interesting figures in there, like wrapped Bitcoin, right? Like nobody in this room has that garbage. But the way that that's kind of fallen apart versus, the Lightning Network. And, the crypto VCs are definitely looking at Bitcoin again. I do a lot of calls with them. Somebody on the other side of the world who has a crypto fund, they want to know about Bitcoin, and they say things like, we weren't watching it, but now it's a part of the narrative. Now we're looking at it. It's sad that the reason they're looking at it is because, of recursive inscriptions and ordinals and kind of everything else. But it's nice that there's a renewed enthusiasm with the crypto VCs who are finally looking at it. The things like, we were interested in crypto, but now we're looking more at Bitcoin only. We're interested more in Bitcoin only. I mean, I've been hearing that a lot. So it's good to get some of those crypto VCs in. They're so focused on tokens and exits and like all of this sort of things that we look at as nonsense. But in a terrible market, which now is probably about as bad as it could possibly be, not to be negative, but that is the reality. It's great that the Bitcoin VC funding, basically every KPI and metric you can look at is up year over year.
Yeah, interesting. One last little data point. You flagged the market dominance for Bitcoin. Low 40s percentile, and that's inclusive. If you look for every dollar pegged asset, every euro pegged asset on any one of these smart contract platforms, so that's being as conservative as you can. It's still a very high number. 1.31% was the grand total of the venture dollars that went to Bitcoin native companies. So there is a very clear gap and opportunity to grow this over the coming years.
Right, and so there's so much opportunity, and as Mike just mentioned, there are a lot of companies now that are looking for funding, and let's talk a little bit about that. So, as you said, it's a quote-unquote, let's say the market is down from the high, and so there's a lot of people, but on the upside then, as an investor, potentially maybe the valuations are a little more, let's say, reasonable for you to invest in, rather than you feel like you're having to invest at a very high multiple in some of the companies. Any comments there?
Yeah, look, TVP cares about price. I think we got to get it right. It can be attractive when someone's like talking some big numbers in terms of dollars raised that ends up implying a valuation that's out of step. And I say, look, focus on dilution. What amount of capital, what's the quantum of capital you need to operate for the next 18 to 24 months? And think about it from a dilution standpoint. Don't get hung up on these vanity metrics, because there is cyclicality, and there always has been, and there always will be across the cycle. And so think long term, don't get hung up on the vanity metrics, and demonstrate some very clear progress. Understand like the old adage for it's very similar to what they teach you when you're giving presentations. You tell them what you're going to tell them, then you tell them what you told them. That's like the classic, like, do it that way. It's very similar with working with investors, and just set some expectations of what the milestones are, go back, say, like, we did that, actually we did these other two things, and demonstrate some track record and build a partnership with your capital partners along the way that you're building companies. And you don't have to get stuck in this, right? Because, by the way, if you're way outside on a valuation, no one wants to do down rounds. You can be faced with an avoidable existential moment later in the company's life. So it really is about dilution at the end of the day and what's necessary to get what you need to build a company.
So Stephan's being nice, saying, we're off the highs, but the fact of the matter is it's very hard. It's impossible. Everyone is exhausted. Okay, this is just my opinion. I'm not speaking for Christopher, but everyone's exhausted. Everyone is just asking everyone else for money. I mean, the LPs have to be exhausted from being pitched constantly, because a lot of this Bitcoin is an emerging VC niche area, right? A lot of those funds were deployed and raised around the same period, right? So you've got multiple Bitcoin VCs that are raising or preparing to raise their next fund, right? So they're pitching LPs, all right? And they're also pitching the angel investors. And then you've got every company that's raising money right now. Every company is raising money, so they're pitching the angels. And everyone is just asking everyone for money all the time. Half of this room is probably asking the other half for money in the back out there. But I mean, and you're the LP and you have cash and you're getting paid 5% not to invest. And that's not a bad place to be either. Okay, we had a frothy time. The everything oversubscribed, that's done. I mean, that's done. There's a few rounds that have happened recently where, they've filled, 7+ figures, and that's great. But for the most part, founder goes out. Maybe they're going to raise this amount of money. They raise 50% to 70%, and they get tired. They get exhausted because you can only do one thing, right? You're either raising funds or you're building your company. And then you're tired of raising. You got 70% of the way there, and you go into this kind of passive fundraising mode where you answer the phone, or maybe you take the incoming calls for the rest of it, but you go back to building, and most of the rounds are in that place right now, and I like calm and orderly. Before 2 years ago, year and a half ago, you circle back with a company that you plan to invest in. 2 weeks later, we'll see you at the next round, and you get shut out, and that has not happened in a while. So it's which also leads, what is blood on the streets and everything that they say. This is like the best time to invest. This is the best time to become an LP and invest in Bitcoin venture capital, or to do angel investing, or one of the syndicates, or get started with supporting these companies, because the valuations have contracted, along with egos and expectations, and profitability matters, right? It's not just let's raise $2 million to buy 20 months of runway. It's milestone-based financing. People are really looking at the next step, cutting their burn and getting to a cash flow break-even, which should have mattered the whole time, right? But in a defensive high interest rate environment, those things matter more than burning and growing. So I like orderly and calm markets. This is like, tumbleweeds blowing around and stuff like that. It's pretty tough out there. So if anyone's thinking about investing in Bitcoin startups, now would be a great time to get rolling.
I might have a slightly,
Uh-oh, shots fired.
Shots fired. Yeah, look, I don't want to leave the impression that there's actual tumbleweeds floating around. Like, deals are getting done. There's an up round right now, and it's happening in flight. Over the last few weeks, I'm working on 2 deals, and both of them are going to be marks up, and certainly one's going to be oversubscribed. So anyway, it's a good time. It's a consistent time. This is a moment, though, where speculation gets rationalized. And that's good. That's a healthy thing. That's how markets are supposed to work. They'll course correct. It's a forcing function. That's why you don't raise more money than you need, because it's very easy for that cash to just go right out the door. It's not a forcing function on discipline, and those kinds of things ultimately always matter, even if it feels like momentarily they don't. So it's an exciting time, but I think, yeah, to be fair, yeah, sure, the valuations are ever more attractive at the moment. And but I will say this: we've been around for a long time, and I think you would probably agree, if this were 2019, 4 years ago, like, there wouldn't be hundreds of people sitting in a conference. Like, things are a step function stronger, even in what some might describe as a bear market. I am an eternal bull, and I'm here for it.
Yeah, that's a great comment about the difference between 2019 and today here in 2023, with so much more advancement in education and the community and the businesses, of course, and the ecosystem and the people who are doing investing as well at all levels, whether that's venture capitalists, the LPs who are contributing funds to them, the angel investors in the space. It's all growing. An interesting area that I find interesting, and I'm curious to hear what you guys think. This is a sentiment I sometimes see in social media amongst Bitcoiners, where maybe it's a slight confusion of the open source ethos. There's almost this kind of everything should be free kind of idea. And that doesn't necessarily jive well for, let's say,
fiat thinking, isn't it?
Right. It's
zero marginal cost.
Right, because people have this idea that, the product should be free as well, open source, right? It's like, wait a minute, we need there to be profitable businesses in order for those businesses to be sustainable. And then obviously you guys as investors are looking for profitable businesses. So do you have any comment on that? Is that a sentiment in the community? Is it a mismanaged expectation? What do you put it down to?
Look, we've been strong supporters longitudinally for free and open source software contributions from our companies. Famously in this room, I'm certain, Caravan is a key component to multi-party multi-sig, or as Unchained coined it, collaborative custody. When it touches on things like security, you want as many advanced, smart eyes in the world looking at that. It's a give to the community. It's a foundation for someone else to actually build in a competitive way. But ultimately, if you feel like the view is that the world is better, it's more secure when people work together with multiple keys to secure an asset, then that's actually a great trade, and you can focus on the brand and customer relationship side and the sticky parts of the long-term business. So we absolutely support that. It's not always the best case, and we certainly don't invest from like an altruistic standpoint. We don't do grants. I think there's actually a very clear and strong place for that, by the way. We see that with core contributors getting grants. I think there's another. If we're honest, there's a glaring gap that we should actually talk about as a community. How can we pool capital that's not a fit for businesses, business building, company building, but nevertheless, we're still behind the 8 ball a little bit, if we're honest. They've done so much token printing elsewhere. They've funded developer tooling and a lot of things that are definitely not a venture backable kind of asset, but nevertheless make it very quick, very rapid to build an application and deploy it. We're coming to a time where we need more of that, and so there's actually a space there. It's not venture capital, but we certainly could help put those groups of people together that want to contribute to something that's not necessarily in the VC lane, which is only actually a small part of even the businesses of the world.
So you think about open source software and you think about some of these making it profitable, right? I think the biggest one is probably Linux, Red Hat systems. I think Microsoft acquired it for $30 or more billion. That's an example of open source that is very profitable. You have MongoDB, you have things like Docker, where it might be open source, but there's enterprise solutions and other ways to make wildly profitable big businesses. So the misconception that open source means free and open source means no money, it's all in how you scale that business. At the same time, there's tons of grants, just like Christopher said. There's so many people being supported for their work, and there's only going to be more of that.
Yeah.
So one other area that's sort of not exactly Bitcoin, but sort of tangential is Nostra, right? So there's a lot of Bitcoin people interested in Nostra. Is that something interesting to you guys, or do you think maybe it's early yet, or there's not enough users there? Do you have any thoughts?
Look, I think Nostra is cool as shit. I do feel like it is extremely early days. Most people think in the box of social media. I really kind of see Nostr as a communications coordination function that can enable maybe even distribution. We have companies that are playing with that to understand how their distribution models might ultimately play out. One of the things that's great with something that I might describe as sort of Bitcoin adjacent, like a Nostr, is the way that these patterns evolve over multiple decades is that there'll be an experiment, maybe it's an open source experiment, and there'll be some key learning, that evolves and sticks with it. This is, and I would say if there's one thing that we've learned about Nostr, you mentioned, we were talking about zero marginal cost and altruism and what that means. For me, if I look at Nostr versus a like on Facebook or thumbs up on Twitter, if you think about it, that's really pretty fiat like zero marginal cost kind of activity. You're like, yeah, hey, and it invites like, let me try to get as many of those from an ego perspective as possible. But going from zero actual value expression other than the time to some value is actually many, many, many step functions greater and more powerful. And if you look at the Zap, it feels so incredible. There's a way to express value for some value that was given in this value for value thesis, which is really, it's a hypothesis today. I think that's what we're saying. And so if you look at a Nostr, whether or not in 10 years Nostr has survived or evolved, I can't say, but what I can say is that design primitive of the actual value expression through a Zap or on a company in our portfolio like a Wavelake, a Boost, same primitive, different name, to be able to give to a creator directly a value, so creator, fan, artist, fan, writer, reader, that is absolutely novel, and I would say the market has said absolutely. I find myself being a little too giving on Wavelake. I'm sprinkling sats all over these artists. It's the funnest thing in the world. It's super validated. If you haven't tried it, you absolutely should. But anyway, so I think whether Nostr lives or dies, I don't know, but I do know that we are learning some very important things, and that value for value expression, and in particular in like a Zap context, is highly validated by the market.
Nostr and venture capital, okay? So we're 14 years almost into Bitcoin, and no one is using Bitcoin, right? Look at how slow this adoption has happened, right? We're all waiting. We all know hyper-Bitcoinization in the future and everything. We're 14 years, okay? And it's hard enough to invest in just one thing. It's hard enough to just specialize in investing in Bitcoin stuff. And you look at Nostr, and maybe it's 10,000 daily active users, right? If you got $3 or $10 even from every one of those daily active users at this point in time, you still wouldn't have a big business in comparison with what the Bitcoin startups are going for. And actually, the biggest mistake that I see a lot of our founders make, or that I feel they're making, is by saying, okay, we're going to spend this next month, we're going to integrate Nostr. We're going to do this NIP05, we're going to put all these resources in. It's like, for who? For who? You got a billion things trying to kill you every day. You have your core business that you're trying to do, whatever you're trying to do. Now, maybe it's integral to a company like Wavelake or some of these other startups, right, that are really focusing on it. But if you're spending the next month to integrate Nostr into your Bitcoin startup for 10 people, that it really isn't even going to add to your bottom line and your revenue. I just think that there's better resources that you can deploy and better focus, right? It's kind of a distraction. It's kind of a distraction at this point. Facebook had 1 million dailies after a year of launching. Is Nostr going to have that? I don't know. Is it cool as shit? Hell yeah. Right? It's super cool. But as far as investing in it, there really isn't even too much to invest in, there's Primal did around. That was probably the one that we all missed, right? All the Bitcoin VCs, maybe we have Primal envy. But, that was a fairly big round, and I know Max Webster is really interested in it the most. But it's just really hard to just invest in Bitcoin startups, and to start thinking about it. However, when some dedicated capital goes into Nostr, I'm 100% convinced that it will be a Bitcoin VC who's really spearheading that.
Yeah. Fantastic. Well, I think that's just about all we've got time for. So I guess let's close out here with, Bitcoin companies, many of them need investment. So it's a great thing that there are Bitcoin investors who are willing to invest in those companies. So thank you to Christopher and Mike. Everyone, please put your hands together for them and their insights. Thank you.
Oh, hi. Do you have your ticket to the next Pacific Bitcoin Festival? Join us as we shine a light on the best of Bitcoin and Bitcoiners. Visit pacificbitcoin.com for the best deal on tickets now.